Can we add to supply and have lower prices at the same time?
At $50 oil, there's been some discussion in the Trump administration about $50 oil. What most people don't realize, we're at 50 already, inflation adjusted. If you go back 20 years, we're at $50 oil today. If we go to a true 50, you go back to 15, 16, U.S. production was declining in 2015 and 16. The break-even, cash break-even, including dividends for public companies, is $50 to $55 oil.
So that is Scott Sheffield, former CEO of Pioneer. But the larger, more important conversation, we shouldn't even be talking about break-even prices because oil companies won't drill at break-even prices either. That's not a thing. The oil reserves that oil companies hold in their assets, right, in their acreage. Let's say an oil company, I don't know, let's say they have an estimated 10 million barrels of oil reserves on their acreage. Does anyone seriously believe that they're going to produce and sell that to break even? You have 10 million barrels of oil under the ground. How much of that are you willing to produce and sell at break even? When you could just wait a while and make $20, $30 a barrel times 10 million barrels. Or let's say you have 50 million barrels, right? There's this notion out there that oil companies will stop drilling, once we get below break even. No. They will stop drilling long before that. Shareholders of oil companies expect a return on their investment. And that return is not break even. No. That's not a thing. But I will commend Scott for saying that we're already at $50 because that's what I've been saying as well. When adjusted for inflation, 70 is the new 50. 70 is the new 50. We've been talking about $50 break even for 25 years. It's not $50 anymore. It's not. Not when adjusted for inflation. And we are absolutely already there. And if oil prices continue to fall, we're absolutely going to see the drop in rig count begin to accelerate. It's already happening a little bit. I haven't said anything about it because it's still within the range. But once it comes out of that range and we see definitive drops, I'm going to be talking about that. And if oil prices continue to fall, that's going to happen. Quick. We are going to see rig counts fall faster than we ever have, and that is because rigs operate more efficiently faster than they ever have. A rig's not going to be sitting on a well for 6 months anymore. That's not a thing. 2 or 3 weeks. So if we do start to see, rig counts decline, we're going to see it much faster than we have in the past. And always remember the one thing I always say, and that's that fundamentals ultimately win the day, and they will win the day again. All of the drop in oil prices we've seen so far has been driven by negative sentiment towards Donald Trump. The tariffs, the economy, this is all psychologically driven. Fundamentally, oil should not be $66, $67 a barrel. Fundamentally, it shouldn't be. Traders are simply looking ahead to what they see as a crumbling economy. Yeah. Even if that happens, fundamentals will still win the day. But yes, as Scott said, we're already at $50 when adjusted for inflation. So forget about it. Thanks.